how can I say it, metric, so it's all the metrics together. All the metric which I think plays a part into the Bitcoin valuation is here. You will see some metrics are maybe not here that you like, and that's because I give them 0 importance factor. So that's a very important thing that you need to understand for Bitcoin valuation, is that not every metric has the same weight or importance factor. So some metrics for me are way more important than other factors. Like, for example, the production cost of the energy to mine Bitcoin, I only give it a 10%. So if that's super bullish or bearish, it's not gonna change my overall decision. So that's basically how this Excel works. So let's dive right into it. So for me, and I'm going to start with this, the most important thing, what I always look at, where I mostly base my investment decisions on for Bitcoin, is the global liquidity index. So let me start right ahead. And why is that? Well, let me show this. Yeah. So why is that? Well, because when you look at Bitcoin's history, it always follows the global liquidity cycle. So a lot of people will probably disagree with me and say, yeah, it's just the 4-year Bitcoin halving cycle that gives these price moves. But to me, it's just the global liquidity cycle. And the global liquidity cycle always follows the 4-year Bitcoin halving. So you need to look at liquidity. And as you see here, so this is global liquidity with, of course, a 13-week lag, because there is a lag. So that's what you can use as an investor. So for example, you see global liquidity going up. Well, okay, 13 weeks later, Bitcoin should be going up. And as you can see, so from 2015 onwards, it's following pretty closely. Of course, it's not perfect. It's also an indicator that you need to use when you zoom out. So this is like the yearly time frame. It's not to day trade or anything. It's just to look at the big picture, to know if Bitcoin is going to go up or down. There was also I don't have it up here, from Lynn Allen, a research report. And so she concluded that Bitcoin and global liquidity has a 83% directional correlation. So when global liquidity goes up, 83% of the times, Bitcoin goes up as well, with the lag of 13 weeks later. So for me, 83% is super, super good in investing. You never see a metric which is that correct. So for me, I give that 100%, and that is where I base my investment decisions on. So then let's have a look, where is global liquidity at the moment and what can we do? So here is the weekly global liquidity chart. So also every data is from Cross-Border Capital. So that's from Michael Howell. And why is that? Well, it's just the most, he's the founder of global liquidity first. And this is just the best data, because when you look on X or on YouTube or wherever you want, a lot of analysts don't use the correct data. So global liquidity from Michael Howell has all the correct data, is usually correct, and it's much, much better than all the other charts you see on X or wherever. So at the moment, global liquidity is slowing down, but it's still at an all-time high of 184.9 trillion US dollars. And if you see this annually, so annually we had a growth of 5.3%. So why is this? So global liquidity is still going up, but it's not because of the Fed or the US. It's mostly because of China. So the PBOC liquidity, so the PBOC is the Chinese central bank, is expanding, which is good for global liquidity. And as well, of course, the dollar. So everyone knows the DXY is super low. And when the DXY is low, that's also good for the global liquidity. And then, of course, also the bond market. So the bond markets, you can measure that. I got it right here with the MOVE index. And the MOVE index is at the moment going down continuously, which is also super good for global liquidity, because a lot of liquidity in the system is collateral based. And when there is less volatility in the bond markets, that's better for the collateral multiplier for global liquidity. What else did I prepare here? So yeah, this is a little bit more zoomed in. So how can you use it? As I said, with the 12 or 13-week lag, this is a little bit more zoomed in. So as you can see here, since global liquidity is not moving upwards exponentially, let's say, Bitcoin price, according to global liquidity, should top out at 120K, which is only about 2, 3, 4% from here. So this is not super reassuring. If you want to know, so for, like George said, is the Bitcoin top in? I think so. According to the global liquidity cycle, the Bitcoin top will be in January. So in January 2026, this is normally when the global liquidity cycle will top out. And I think this will align with the Bitcoin top as well. Of course, you never know. But when it's January, when the global liquidity cycle is topping out, then I will reevaluate my decision. Maybe there will be more quantitative easing in the US because of the midterms and who knows what. And I'm going to reassess then. But at the moment, I'm thinking of selling everything. Well, maybe not everything in Q1 2026, according to the global liquidity cycle. Let me show the sheets real quick. So I give this 100% weight, and you can see this here as well. So what did I think? It's bullish a little bit since it's going up, but not much. So it's more neutral for me. The move index, as I said, this is basically part of the global liquidity index. That's why I say 3%, but that's bullish. And then next up are the oh no, sorry, I forgot the Fed liquidity. So the Fed liquidity, so this is from the US. Let me show this right here. Up. So, and this is what we saw last week from the FOMC meeting, is that the Fed is still in quantitative tightening. So the committee will continue reducing its holdings of treasury securities and agency debt and mortgage-backed securities. So what this means is that the Fed is still doing quantitative tightening. So basically they sell securities and they reduce liquidity into the market. And that's not good because the US, that's the main financial system of the world. So we need Fed liquidity for Bitcoin to move higher. That's just it. And if we look at the Fed balance sheet, you can clearly see they're still in QT and they're reducing their balance sheet. Only positive thing is that the M2 money supply, so the Fed liquidity is moving upwards and is making new all-time highs. I saw on Twitter, I think it was today or yesterday, this chart, which is showing that, okay, the Fed liquidity is moving up enormously, but the Bitcoin price is not following. So a couple of things. One of the things I want to say over this is that Fed liquidity is only about 40% of global liquidity. So it's not the full picture. And then secondly, why is this not moving up? And I will talk about this a little bit later, is that, well, liquidity has to go somewhere. And at the moment, everyone knows it, gold is going exponentially. So all the Fed liquidity, which usually should go to Bitcoin, is going into gold at the moment. And that's one of the reasons why it's not moving up. I got this one, but this is basically the same chart, but you can see here clearly the same. So normally every analyst more macro analyst on Twitter is saying, okay, if global M2 is going up, Bitcoin should go up. But like I said, first, it's not global M2 that you should look at, it's global liquidity. Global liquidity is much more accurate, and you can just see it at Bitcoin's price, and global liquidity is not helping at the moment. So yeah, like I said, the next part is interest rates, and interest rates are kind of important. I don't know, I gave it a, where is it, interest rates? 40%. So for interest rates are pretty important, but to me, it's more important for altcoins. So as we know, last week, the Fed cut its interest rates by 25 basis points. And the main reason was that there was downside risk to employment. And this is the first cut since December 2024. So this was a pretty big deal. And because it was a pretty big deal, I think it was fully priced in. And the reason why we even went down, to me, is what I just said, that they also said that they will still do QT. So the thing was, the interest rate cut was priced in, but people didn't expect that they were still so hard on still continuing with reducing their balance sheet. But, and now my two more bullish slides will come. So the Fed cut their interest rates into inflation going up. And that's a thing we didn't see since the 1970s. And what we know about this in the 1970s, when also the Fed cut their interest rates when inflation was going up, is that afterwards we really saw a very big bull market, and we might see this happening again. Because we already see inflation. We know Bitcoin is a very good inflation hedge. And on top of that, the value of money basically will go down because the interest rates will go down. So that's one bullish catalyst you can look at. The second one is, so the Fed cut near all-time highs and the bulls loved it. So the Fed cut also their interest rates while everything was at an all-time high. And if you look at history, every time this happened, 1 year later, always, so there's a lot of examples here, always price was up 1 year later. Even on average, a month later, it's bullish, 3 months later, 6 months later, it's always bullish. So usually it's bullish when the Fed cut their interest rates near all-time high. And then the third thing, what I want to say about this, which is also kind of bullish, is that it was not the only cut. So normally, according to the CME futures, every FOMC meeting this month, the Fed will cut their interest rates by 25 more basis points every time. So this is kind of bullish. That's the thing. It was not a one-time interest rates cut. We just started a new rate cutting cycle, which lowers the value of money, like I said. And you don't want to hold dollars or euros in a rate cutting cycle. So usually assets, monetary inflation hedges, like for example, Bitcoin and gold, usually prefer will. So this is a bullish metric at the moment for the Bitcoin landscape, looking it through a macro lens. Another thing about interest rates is, so yeah, I always talk about US. And like I said before, the US is the global financial power. So if you want to make financial decisions, it's always best to look at US, but US is not the only country in the world. So this is the proportion of central banks cutting and hiking rates all over the world. And if you see here, 84% of central banks all around the world are in a rate cutting cycle, are cutting rates. So worldwide, this is a worldwide phenomenon. It's good. So it's good. The whole world is cutting rates, which should be good for Bitcoin because it's also a global asset. So interest rates, pretty bullish. So let me show the chart again. So as you see here, bullish, a little bit bearish I gave it. And it's, to me, it's a 40% importance factor. Moving forward, the DXY. So the DXY is going down as well, and the US dollar is having its worst year since decades. And why is this important? Well, if the dollar is low compared to other currencies, that's also good for liquidity because the value of non-US central bank liquidity and the collateral will go up. That's why, but I don't have the chart here, you always see an inverse correlation between the DXY and Bitcoin. So when the dollar is going down, it's always good for Bitcoin. And at the moment, the dollar is at its lowest point. And so, which should be good for Bitcoin. All right, next up, and I spoke about it a little bit before, is gold. And as everyone knows, gold is making all-time high after all-time high. And so look at this chart here. It's always bullish for Bitcoin. So Bitcoin and gold have a lead-lag relationship. So first, gold makes this move, and we saw this all throughout history. But then, to me, it's 90 to 100 days lead that gold has. So usually, normally, at the moment, Bitcoin should be moving upwards. If you want to catch this move, let's say it doesn't catch this move. Maybe I can do it like this then maybe. In a couple of weeks, maybe, it should be catching this move from last week also. But this only works when certain macro conditions align. These certain macro conditions, like I show here, the DXY should be going down, the yield should fall, and liquidity should rise, which is all bullish, but it's not extremely bullish, like I just said. But it's happening. So normally in that environment, Bitcoin should move up according to the Bitcoin and gold lag lead relationship. Yeah, so and that's the thing. So gold is following exactly the global M2. And as I showed you guys before, where was it here? Bitcoin is not doing that. And the reason why I think it is, like I said, gold is taking all the liquidity away from Bitcoin. And that's one of the reasons why Bitcoin Bitcoin cannot go up, is because all the liquidity is flowing towards gold. And I hope if the lead lag correlation still works like it did in history, Bitcoin should follow the coming weeks. So that's also a bullish thing, in my opinion.
Nice.
Yeah, here you see it. And then, so as you can see here, it's also not new that Bitcoin and gold don't move at the same time. You always see, okay, or either Bitcoin goes up and then gold goes down, or the other way around. And now it's the other way around because they take liquidity from each other because they're both a monetary inflation hedge. So it's normal that they don't move at the same time because they take liquidity from each other. Let me go back here. So I like I showed, yeah, I give it 100% bullish, and to me, it's a 20% importance factor. The second on my list is the stocks, and for example, the Nasdaq. I gave this a 10% weight, and at the moment, well, every index at the world is at an all-time high. And I don't think I told someone in my Discord this last week. I don't think when everything is at an all-time high, when everything will keep making all-time highs, that Bitcoin will go down. That's something we don't usually see happening. So normally, I think Bitcoin will follow the rest of the pack as well. I don't have a chart for this. You can also value Bitcoin if you compare them to other currencies. I don't have this as well. So I'm not going to show everything today because then we will be here for about 2 hours. I only show the things that are important at the moment. For example, ETFs, I don't have anything up. And I also think it's less important than before. Some guys that were here last year when I did the stream with George, I gave this, I think, 100% or even 70% because back then the ETFs were the hottest thing. And it was super important how Wall Street viewed Bitcoin. But as we know at the moment, it's stabilized. It's not that important anymore. So that's why I'm not going to show it. Exchange inflows and outflows are also super important. And then my next thing, let me drink first, sorry. I'm rambling. So the open interest to me is also super important. And I think this was one of the reasons why we saw the drop. So where was I? So here at last week, there was a lot of open interest and I was expecting a flush. It was bound to happen. A lot of people were too excited. There were friends of mine who were talking, yeah, should I buy Bitcoin now? Everyone thought, yeah, it was going to be super easy. I'm going to go leverage long. The Fed cut their interest rates. It's usually bullish. We're near the end of the cycle. Everything will go up. Of course, the market will not let that happen so easily. Of course, we needed the flush. We haven't seen a flush like this since the tariffs of April the 2nd. So, of course, it was bound to happen. And I think this is one of the reasons we saw the flush this week. This plus, of course, the QT, liquidity not being there, and gold taking all the liquidity. To me, these are, at the moment, the most important factors why we saw the drop, if someone was about to ask that question. Oh, I didn't show it on my screen. Yeah, it's here. So you can see, so this is it's a Bitcoin stream, but as you can see here, most of the liquidities were in altcoins because everyone was thinking, yeah, alt season will come. If you look Bitcoin, not that much, but of course we need to look at the whole crypto market together. But yeah, there were more liquidations into the altcoin market. So to me, that's also important. And it's actually very good now that we saw this flush because, and what did I say? Yeah, so to me, it's neutral at the moment. It's not that we don't have open interest, but at least we saw the flush and that's good. Another thing, user adoption, I don't have anything. And then another super important thing is the stablecoin liquidity. I don't know if you saw my video about this, George. I posted a video on this last week.
Not yet, I think.
You shared it, so thanks for that, by the way. But
no worries.
So if you guys want them, so I'm not gonna go over this because my video lasted 18 minutes. So if you guys wanna look at that, you can look it up on my YouTube channel. So my latest video is about the stablecoins. Why is this important? Well, there's been a lot of stablecoin inflows these last few weeks. As you can see here, $4.8 billion stablecoins plus on top of everything. And this is very good because this is just liquidity into the system. This is liquidity from the fiat system into the crypto ecosystem. And as long as liquidity will move up, as long as stablecoin liquidity will keep moving up, to me, this is one of the more important things in, let me show it like this. To me, this is one of the more important things in crypto because everyone needs to buy crypto with stablecoins. If stablecoin liquidity keeps going up, that money, that liquidity needs to flow eventually into crypto. So you see this big gap. And normally a gap like this, we see in the early phases of a bull market right before prices will go up. Normally it moves in sync, but at the moment there is a very big gap. And I think this gap will get filled because it's impossible that stablecoins keep moving up while crypto is not going up. So to me, that's bullish as well. So yeah, I gave this an important factor of 25%, but it's super bullish at the moment. Next is, or do I have anything else from that? Oh yeah. So also about stablecoins, and this is on Crypto Quant. Here you can see it very clearly. So this is the stablecoin supply ratio. And every time, because as you said, people are looking for a top or people are looking for a bottom. Every time there is a top, you see the stablecoin supply ratio above the Bitcoin's price. So that means that there's more stablecoins, less stablecoins being printed compared to Bitcoin's price. And at the moment, stablecoin supply ratio is just falling and falling and falling. And this is something we see at the local bottom. So this being so under the Bitcoin price is also super bullish to me. But like I said, this is here still stablecoin supply ratio. I give it a 25% weight. Next up, I think next up is the MVRV Z score, which is also super important. And we're nowhere near a top yet. When Bitcoin see a top, you see these are previous cycle tops. MVRV Z score is way higher. And at the moment, that's not the case at all. So based on this, I really don't think we're at the top yet. Next one is the, like I said, the halving the 4-year cycle theory. A lot of people are not going to agree with me, but I don't think that is still the case. I don't think it still exists. Why? Because the reward for miners is so little that it doesn't move the needle. Before, it was super important, but at the moment, I just think we follow the global liquidity cycle. So that's why I gave it only a 10% chance. If you follow it, it's bearish because then the top should be in October. But I don't follow it. I know a lot of people in my Discord still believe in it. So who will be right? Well, we will know in October. So if the cycle is going to top right now or if the cycle is going to go a little bit longer. So that's something we will soon find out. Of course, Bitcoin runs on energy. So the next important thing is the energy value. What I have on that is here from Capital Investments. We don't see it clearly. But how I use this is basically to find bottoms. When it costs more to mine a Bitcoin than what the Bitcoin price is at the moment, that's usually the bottom. So you can use this to know when there will be a bottom. So I don't have a membership account, so I cannot see everything. So I cannot see the latest 3 weeks, but I really don't need it. You know, it will be here. So the bottom will be around 87,000 according to this metric. So this is still, to me, this is, what did I see? Wrote. Maybe I didn't change it. So, yeah, so it's not bullish. Why? Because the energy value is a little bit lower. So you can use that, for example, to buy spot Bitcoin when it's at that price. I get 10% is maybe a bit too high. Maybe the importance factor is 5%. You don't need to be bearish based on this metric. This is just good to know where the floor price is basically. What else do I have? Oh yeah, and I know George is not going to agree with this. Is the seasonality. So yeah. The thing is, seasonality to me, it works a little bit because of in trading, and I think I wrote it down here. So TA to me is just a tool to measure sentiment and repetitive human psychology in markets. And to me, seasonality is kind of the same. It's also just follows human psychology and repetitive behavior in markets. So I don't think it's mega important. What did I give it? I gave it a 15%. So it's not mega important. So you don't base your investment decisions on this. But I do think it has a little bit of merit. So for example, my mate, where I always stream with 0x0 Cool, he doesn't believe in it either. I know you don't. So
yeah, I feel like a lot of people, more and more people are using it lately, and it's like all over X. This month was mostly bullish in the past, so it's gonna be bullish again. And like I've seen it over and over again, that they just get fucked in the market because of prices going the other way. So I don't know. Sometimes it's true, but I think it's more of a gamble. But sure, everyone in his own thing, you know.
That's why I also just gave it a 15%. It's sure you can look at it, but
Exactly.
don't base anything on it. So, but as we know, so based on the seasonality, October and November are the two best months in Bitcoin's history. So according to the seasonality, and especially when you have a green September, then it's super, super bullish. But so according to the seasonality, we are in for two great months. I think this is from Bitwise as well, shows exactly the same. So let's see about this. I think everyone is hoping for an October. So I'm hoping on it as well. So let's see if it plays out. The next thing on my list is the crypto fear and greed index, and maybe I'm gonna show it on this screen. So at the moment, fear and greed we're at the moment in fear, and to me this is good. Why? Because you use this as a contrarian signal. So when you have a lot of fear, that's usually a good buy signal. So for example, here you see it's a little bit more clear. Every time, so at the moment we're in fear, which is orange. Every time when we see the orange, it's usually a good local bottom. Or of course, the more fear there is, the better buy. But at the moment we're in 41, so a little bit into fear, which is usually a good place to buy on spot. And I think that's more the difference between me and George. So all my metrics are super zoomed out and are used to buy spot. It's not really used to go leverage or to make short-term trades. That's more where TA is better. And of course, I'm now showing the Bitcoin Fear and Greed Index, but as you guys see, I only give this like a 10%. So normally I don't really look at it, maybe real quick once a week, and then that's also about it. Google Trends is also a good metric to measure the sentiment, and I give this a 5%. And so sentiment is super low. Normally in a bull market, sentiment, so the Google searches for Bitcoin go through the roof. Everyone is looking at Bitcoin. Everyone is talking about Bitcoin. At the moment, that's not the case, and it's even going down. You can even chart this. Normally, Bitcoin price and sentiment follows a little bit, and at the moment, the Bitcoin Google search volume is super low. So I think that's super bullish. So let's go back to the chart. So this is bullish at the moment. If nobody is looking up for Bitcoin, then it's a good time to buy. If everyone is talking about Bitcoin, looking up Bitcoin, speaking about Bitcoin, buying Bitcoin, then it's your time to sell Bitcoin. Mm-hmm. And I'm almost going through it. So then next up, we have the regulatory landscape. And as we guys know, so I didn't prepare anything for this, but the regulatory landscape for Bitcoin and crypto in general is just super bullish at the moment. The only question is, when will the strategic Bitcoin reserve come? Who knows? Oh yeah, the only thing what I wanted to show about this is that the Senate is holding a hearing on digital asset taxation on October 1st. And why is this important? Is because I think, I'm not sure, they want to have no tax on crypto. And when there will be no tax on crypto, they will be super, super bullish. And I think we will then see a spike upwards. So, but let's just wait on October the 1st. Maybe they won't even announce it immediately. So that will be something for later on in the year. And then the last thing is war risk. And at the moment, that was funny. I spoke about it in the beginning of the stream. There were there was Russian military aircraft detected in Alaska air zone 1 minute later. So now you can see it, but it was 1 minute later, and there goes crypto. So I think crypto took a little dive when the Russian military was seen in Alaska. But then again, war isn't necessarily bad. Well, of course it's bad, but for Bitcoin, it's not necessarily bearish for the price. That's why I gave it a 0 to 100%. Why? It's because when you look at history, almost always when there is a war, the central bank is printing a lot of money, which inflates asset prices. So actually, when there is a war, Bitcoin moves upwards, but you never know. You never know what they're going to do. That's why I gave it a 0 to 100%.
It's more short term. I feel like it nukes, but usually whenever they talk about the war, you get those lower time frame dumps. But I've seen that they are often a very good buy opportunity indeed. So I agree with that.
All right, and so this was literally every valuation metric that I think it's important for Bitcoin. So now, George, I just want your input. So as you see, I always do bullish, neutral, or bearish. So what do you think? What should I give TA? I leave this up to you. Where are we at the moment? So you can give a % for bullish, a % for neutral, and a % for bearish.
Well, like I said, and I'm talking mainly about the higher timeframes then, because of the way the monthly and stuff look. I'm simply waiting for the close in 5 days, and I think that will give us a lot of information. If that closes bearish, I feel like the next couple of months are going to be down. If that closes bullish, we could see all-time highs within weeks. So I would give it like probably 80% neutral, and both 10% bullish and 10% bearish because of those reasons.
Okay.
So yeah. All right. Good stuff.